Happy Friday, Brian Manning here with yet another Friday update. My gosh, these weeks just keep rolling by. Let's see, Monday this week, markets were closed for President's Day, and so not much to report there. Tuesday this week, we still had yields on the rise for the 10-year Treasury, and we'll look at the chart here in just a minute to give you some more feedback there, but still seeing a slight increase of mortgage rates as we've been going through this week. Thursday this week, there was a 20-year bond auction. So what that means, there's a large auction of 20-year bonds, and investors from around the world can purchase these. And it was really met with a very tepid demand. And likely this would potentially mean that investors are looking at these bonds and are thinking, well, hey, maybe these yields have some room to move higher. So we don't want to jump in and buy yet because we might be buying too early. So it wasn't really great to see that. Also got some Fed messaging this week, and the Federal Reserve still saying, hey, we're going to keep rates at 0% right now. And we just think that the U.S. economy is far from recovering, far from being at an area where we really want it. So we're going to keep rates at zero for a long time, which is pretty much what we expected. Also, this Thursday, we got initial jobless claims. They were higher than the prior week. It's still a very volatile number. Our unemployment, unfortunately, is still running at around 10%. You know, one of the questions that we ask is, you know, is unemployment potentially very high because people are receiving unemployment benefits at a really good amount on a weekly basis, and potentially is there a large number of people that are earning more on unemployment than they would if they go back to work? And that's also going to give us some impact on inflation as well, because when supply chains are challenged and it costs more to produce goods, it's going to impact us on inflation as well. So we'll keep a very close eye on this as we do every week. And then today, Friday, we got existing home sales. So existing home sales was up 24%, which is just phenomenal. It's a blockbuster report. On a year-over-year basis, inventory is down 26%. So it's incredible to see inventory down 26% and home sales up 24%. So there is just fierce competition out there in the marketplace right now, and it's just unbelievable. I have a tool in place that we can use. It's called bid over asking. If you're looking at buying a home and you want to offer more than what the asking price is, reach out to me. I have a report I can send over to you to give you some feedback and just show you what the numbers look like there. Also, unbelievable to see that home sales up 26%, prices up 10%. So still really solid appreciation right now. And another number, this is something we need to really pay close attention to, is first-time home buyers. So first-time home buyers moved from 31 to 33%. So that means that 33% of all transactions were first-time home buyers. If we look at millennials that were born, and we look at the average age of a millennial turning 32, 33 years old, which is really coming into being a prime first-time home buyer, that number is really hitting a solid amount in the population and really steadily increases over the next 5 to 7 years. So with millennials coming in as a very strong group of first-time home buyers, this is definitely going to continue to push the housing market over the next 5 to 7 years. So we're going to see a very robust housing market all of this year and definitely into next year as well. Let's take a quick look at the chart. So we talked last week about the yield on the 10-year Treasury. And last Friday, we were right around here and we had said, hey, you know, mortgage rates generally go in the direction of what the yield on the 10-year Treasury is doing. And they don't go like lockstep, but rates kind of move in the general direction. And we said, you know, hey, last week it had just broken right above this. And if the yield continues to go, we're going to have a little challenge here. So here we went all week, and here's where we are right now. So I would say in this last week, we definitely saw mortgage rates increase. It hasn't been substantial. We're still locking in phenomenal interest rates, but we have definitely seen a little bit of a rise in mortgage rates. It looks like the 10-year Treasury wants to get up to this number right here, which is right around 1.37. At that point in time, we'll have to wait and see. It might take a little bit of a breather and come back down. If it does, that means mortgage rates will improve. But from last Friday through today, we have definitely seen a slow, steady, minor increase in mortgage rates. I'm around all weekend. If you have any questions, let me know. If you want to get pre-approved, you need to revise pre-approval, call me on my cell phone, text me. I'd love to help you any way I can. Happy Friday. Have a great day.